Hey folks, and welcome to the Pipnotic Symposium on the 12th of August 2025. I've been really busy traveling and moving and whatnot, so I haven't gotten around to doing any symposiums, but I'll slowly start doing them now as things begin to settle. I'm back in Bali now, just packing and moving and whatnot. On the 19th, I fly back to Denmark, and then everything shall be back to normal, which I really look forward to. Actually, I'm not going to get on a bloody airplane for a year. Just been traveling too much, and I'm just kind of fed up with it. Anyway, so I just wanted to talk about the dashboard and the new dashboard that you can see here, and this is showing us the plus ASR, and I call it plus ASR just to show that it's different than the normal ASR. And the difference between this one and this one is, well, first of all, this one is the EA running on people's computers and posting trades, and this one is it's a piece of software that I wrote that runs on the web server. It downloads a bunch of data, as you can see. I mean, there's so many different assets that it's looking at now. If we find a few more, I mean, it's scanning tons and tons and tons of stuff. Loads and loads of different assets, and what it's doing is downloading the data, it's analyzing it, and then it's looking for signals. Okay, and so this value here, the scan time, is when the scan was actually performed, and this was when the signal was identified in the data, and these are UTC offset. So this is UTC, and the data is at UTC -4, which is quite strange, but yeah, some brokers have weird offsets. Okay, and then here you can see the outcome. And so the way I'm doing the outcome is I'm keeping an eye on the data, and let me try and draw it for you. So let's say that we have, let's say that the prices kind of did this, okay, and the software said, well, we want to start to sell here. So what it's doing is right here, it's putting in a market order. Okay, and it's putting a static stop above and below just here. And so whatever happens with price, if price goes like this and goes like that and hits the target, then it marks it here as a win. Or if it does this and stops it out, then it'll mark it as a loss like that. Okay, and this is typical of prices that are continuing to expand. And you'll see this in the data as well, because here we had a USD 30-minute signal. Sorry, the Aussie, it was an Aussie USD signal I saw just a second ago. Okay, here we have an American dollar Japanese yen. This was qualified at 2 o'clock. We have this one here. This is at 2 o'clock again. So it's playing. It kind of keeps ringing. Here we had at 3 o'clock, and here we had another time at 3 o'clock. And so this is just telling us that the dollar Japanese yen is continuing to move higher. Okay, and so what the ag wants to do, it wants to sell when prices expand positively and buy when prices expand negatively. And so, I mean, we have not hit any stops yet, but we're probably getting close to some. Okay, here you can see the same thing on the Australian dollar with the Japanese yen, 130 GMT -4. We hit the stop, and then we kept going. We keep expanding, and we took another stop, and so it's probably continuing to expand. Okay, and this is really good because, I mean, ideally what you can do is you can go like this, Japanese yen, and you can kind of see, make sure they're all at relatively the same time. Yes, they are. You can see here that we had a 132, 230. So that means that the Australian dollar Japanese yen is continuing to go higher. And so now we're really at a point on the 30-minute time frame we could expect prices to move lower. Okay, because we keep kind of hitting, moving beyond these thresholds, and this is a pretty important thing to be aware of. And if we do the same on USD Japanese yen, we have them here. You can see that here we were trying to sell 536, 6, 738, 9, 930, 10, 1030, 11, again at 11. This is a winner. So we probably had prices continuing to move higher. Then we finally had a breather, and that breather here to here was this winner. But all of these losses, that was attempts to sell as prices were continuing to expand. You can see it's continuing to go up. Okay, so we can expect prices to be continuing from this pullback and continuing to move higher. Okay, all right. And so here, I mean, I'm just tracking these signals here, and just trying to follow along with the data and see what they did or what they didn't do. Okay, and if you go like this and you can kind of go all the way to the end, a lot of these signals here would have either hit their stops or their targets, unless it's a big time frame like the daily, where prices can, I mean, they can still be kind of very, very positive, but still not have reached the target. Still kind of moving around, and this can go on for days still. Okay, so this is why these longer time frame ones are still open. With the shorter time frame ones, they normally close off a little earlier. Here we had the 30-minute. Here we had a 4-hour. But as you move forward here, you can kind of see how a lot of these will slowly. Oops, what happened there? Here you can see that slowly they'll begin to close out, either in profit or a loss. Okay, and the one thing that you have to remember is this is super static way for me to figure out if we are reaching our target or the stop, because I'm only looking at, I mean, a measurement of price away from the entry. So there's no rocket science in this. And so what you'll be doing is if you see like a signal that says to sell link, but then you'll be looking at the structure of price. Okay, so prices are going up, we're forming some prices, and then prices are moving higher. And when it says to sell, I mean, let's say we have a zone here. I mean, you could get in the market, but you could also put in a limit order to sell here, your stop above here, and your target down here at the lows. This would be the more advantageous way to do it. And my son has been doing this now for about 10 days in the way that I just showed you, by looking at price instead of just getting into the signals. And he's been doing really well. I think in 10 days he pulled an 11% or something, which was crazy. So he was giving me a lot of high fives when we were in Italy, saying, "Wow, this is really awesome, Dad," which is pretty exciting, very exciting. Okay, and so yeah, just look at these signals and use them with a little bit of discretion. Okay, a little bit of discretion. So what I like to do, I mean, if we just look at an example, let's look at the American dollar, Japanese yen. We go to the charts, American dollar, Japanese yen, and this is 30-minute. I mean, I put that line in when that signal was kind of set off, and you can see it's happening right here at this sell zone right there. Okay, so having a little reaction there. Okay, and then prices are, yeah, who knows what they're going to do. Would I sell here? No, I would not. Why? Because of this. Okay, this is the beginning of the sell zone, so this is a natural place for prices to react. But we have a huge price inefficiency just there, big liquidity void, which means void of liquidity, which means thin liquidity or no liquidity, which means that prices can really easily move back up to the origin of that move, which would be around here. And we are kind of in an uptrend, as you can see, and so selling low like that would not be a good idea. I'd rather be buying down here and selling above. Okay, so you have to use these with a little bit of discretion. If we have a look at one more, let's have a look at the pound, Mexican peso. Right there. Okay, and what was this? Pound Mexican peso. This is a sell, and this is a 30-minute. So it wants us to sell now. Okay, and so would I do that? Yeah, I don't know. Go to the 1 hour. I'd want to look at context, and you can see that when prices are first before I do anything, I need to see where we are in the bigger picture. Here we're let's see what this is. Here at this little price structure here. Yeah, would I be selling now? No, I would not be selling now, because what we can see here on the 4-hour chart is that, I mean, back here we have a bit of demand, we're poking into it, and now we're kind of looking for the buy zone. We had a rejection there, had small supply here, removed, we took it out by that, and so there's something down here. Okay, so I would wait for prices to maybe come down here, but then I think they're going to move higher, not go further down. And so a lot of these signals, I mean, they're not trades that you hold for days, but they're trades that you can get in and get out of pretty quickly. And so, I mean, this says to sell here, and so you could sell there, putting your stop above here or something, or you could put a limit order at just above the highs with your stop a little bit higher. And then you just want to get out at these small these small price movements, not expecting prices to go on and on forever, because they won't. Okay, instead paying attention to the major flows. Okay, good. So that was this table, and then there was something else that I want to bring to your attention, and that is, where's commitment of traders here? COT. I want you to pay attention to gold, because gold is doing something that's really interesting. If we look at the gold information here, you can see that the non-commercials, this is highly, how would you say, maybe even slightly controversial about who's driving the price of these assets, the non-commercials or the commercials. But I find that the non-commercials are driving the price, at least for some assets, while other groups, as we've seen in other videos that I've done when I use the other dashboards, where you could really screw down, like bornød in Danish, screw down, not really the same thing, but you could really kind of drive into the detail by looking at the other groups, like the small speculators and non-reportables and stuff like that. But here you can see that, I mean, the net, I mean, you can see here that we were super bullish, and then we slowly start to take profit. You can see here, and then we started to accumulate some big positions again, and now we're again a big position accumulation for gold. And so when you go to a gold chart, you can expect it to have been super bullish and then had a good pullback, and then maybe beginning to resume that bullishness again. And this is going to be on the weekly chart. Yeah, so we were super bullish, and then we had the bit of a pullback, and then we're slowly starting to pick up some bullishness again. And also notice, I mean, we are super inefficient. Okay, so I would really like to see prices move a little bit lower before I decided to get in. Okay, you can see here that, I mean, we do have, I mean, I want prices to move lower. I mean, there's a lot of inefficiency down here. So I'd be super keen if prices did move back to here. If prices move back to here, then I would be super keen on beginning to buy. I know that on the plus ASR, it was saying to buy down here. I think, where's the dashboard? No, I moved away from it. Let me go to the dashboard here very quickly. Okay, XAU. Oh no, it's not in here. I don't know where I saw that, but I saw that something was saying to buy gold, or maybe it was just me looking at the price chart, and the price is just kind of visiting again the beginning of the buy zone right here. You can see just these wicks low here. Inefficiency, price kind of stabilized a little bit, liquidity picked up, and so now we're just poking right into the bottom of those lows there, and this is where price turned around. So we might we might move away from here, because essentially we have kind of we had some supply which we tested. price went through it, and now we're essentially revisiting kind of the backside of that zone. But we did not really get all the way into it. I would like price to come down here. If that happens, then I reckon it's time to load the boat. The same for silver. Here, I'd like silver as well. I would really like to buy silver. Let's have a look here. You can see we've been pretty bullish here, the non-commercials, and then we started to kind of pull back a little bit. But I'm expecting also silver to move higher as well. I'm just waiting for that to materialize. Anyway, but yeah, check this stuff out. It's really interesting. Just kind of follow the groove here. Remember, this is weekly data, but follow along with this and kind of see how it's going. And just follow these trades. If prices are pulling back on silver, like you can see now, if you go to a silver chart here, you'll notice that they're pulling back. Silver, US dollar. Yeah, and you can see they pull back a little bit here at the end. And so really pay attention to this stuff because it really provides a lot of information. You can look at this. You can just see, okay, we have these small price movements. And also remember that this is weekly data. And so on an hourly chart, I mean, these are really big pullbacks. So if you go back here to, when was this? October of 24. Let's go back to October of 24. 24. Actually, I don't know which comes first. Let's go around here. Okay. So October of 24. Yeah, so you had we had a really big pullback. Let's see when this started. This was October 24th. October 5th. Okay, October 22nd. October 29th. Okay, so this is a pretty big pullback right here. And if you look at the price chart, I mean, there's a really, really nice pullback there. You can see from like the 24th all the way down to the 24th of December. So we go back to December. Yeah, this is around December. This is when it started to pick up again. And so pay attention to this stuff. It's really important. It's really, really powerful. So when this starts to happen, maybe, we get like a couple of weeks of negative data. I mean, on the price chart, I mean, trying to buy this would be a really bad idea, as you can see. And so just sell. Just follow the movement of non-commercials in the dashboard, because they're really, really good at showing us where these costs are. They're burning. They're doing harvesting in the rice fields, and then when they're done with the rice, then they burn like the remaining grass. And there's a bit of a breeze in from the field, and so it's kind of choking here. Anyway, so what I'm trying to say is follow the direction of the non-commercials and the commitment of traders data. Okay, and if the chart says it's going down a little bit, well then sell. If it's going up a bit, then buy. Okay, it's super important that you pay attention to this stuff. Okay, good. Well, I'm going to leave it at that. If you have any questions, let me know. Thanks for watching.